Welcome back with a complete understanding of what the markets have to offer in the near term and of course in the long term as well. We have with us a very special voice. Waqar Naqvi, CEO, Taurus Mutual Fund, is with us from Mumbai. Waqar, good evening. Welcome to Profit. Let's first start off with your assessment of what happened in today's trading session. We have hit a new 52-week high. And it seems like every time we hit a new high, the markets tend to consolidate at that particular mark for a few days, and that's when we see the next leg of up move. Is that the kind of trend you're anticipating in the coming few weeks and even months ahead, or do you think this is perhaps the time for some correction, given the fact that valuations are seem to be a little stretched right now?
Yeah, Ashu, we wouldn't read too much into today's developments in the market. Yes, it does appear that there isn't any negative or a downside which is worth worrying about. Yet, for a pragmatic investor, it might make sense to book some profits also. As you said, the valuations appear to be slightly stretched, but slightly is, I would say, very, very slightly stretched. What is worth noting, however, is that with the upgrade in the rating for India by the international rating agencies, one of them has done it, others expected. I think the FII allocation to India will go up. So I would be happy to say, in a couple of months' time or maybe 3 months' time that, okay, now the valuations are overstretched. But that again would be a continuation of more money chasing lesser stocks with more FII money expected in. And today's move also appeared to be a case of more money chasing stocks driven by liquidity. So we are not reading too much into this. We pursue and continue to pursue our thinking and what we feel in respect of various sectors. So not too much to be read as far as we are concerned in today's movements.
Talking about the aspect of valuations, what's your FY11 Sensex EPS calculation right now? What's the kind of level you're looking at? And if you do believe that valuations are just about slightly stretched right now, do you think that there is scope for some more upside before we actually see some kind of correction? And the second question is regarding the earnings. Do you think that the stability in the market, the strength in the market is perhaps strengthening the point that most of the market participants out there do not expect any negative triggers or any negative outcomes as far as the earnings season is concerned? Pretty much most of it is reflecting in prices right now.
We see a substantial upside, Ashu, substantial upside going forward. As I said, A, driven by FII valuations, B, while the government borrowing calendar is not really exactly in my hands and we don't know the specific details, our understanding at this point in time is that the government borrowing program might be lesser than what the market has been expecting, which again is a positive and goes on to say that the government is serious about reducing the fiscal deficit and wants to look at ways and means other than raising money from the markets. So, well, obviously you are aware that the best way other than raising money from the market players is, divestment, which is again a very healthy sign. So we definitely see an upside trend as time passes. We also do not see any major negative trend in the marketplace or do not expect the markets to correct sharply. Your second point, that, the earnings, the advance taxes have not been a disappointment. The advance taxes paid and the underlying bullishness prevailing, which we gather in our various interactions with corporate CFOs and bankers, definitely indicates that, comfort is returning. Banks might be looking at higher credit offtake, would be willing to loosen their purse strings much more in the months to come. So all that augurs well, I would say, for the Indian market. I only hope that the Indian retail investor doesn't miss out on the rally if it is very, very sharp.
I just want to know what you have been doing as far as your investments are concerned. I know you're long-term investors, but I just want to get into the aspect of the primary market, some of the recent issuances in the primary markets. Have you invested in some of those quality issues, which again have seen good amount of listing gains coming in the case of DQ Entertainment today? Some of the other recent issues also, which did leave something on the table for the investors, both on valuations and even on the price band, actually saw a good amount of up move. Have you been investing in some of those IPOs?
We have been, Ashu. We have been investing and we have been, up till now, not have been disappointed with any single investment that we have made in IPOs. We have made money on each one of them. And yes, some of them we hold for a longer time after they are listed. Some of them we sell immediately after they are listed. But yes, we have been taking our picks. I wouldn't say we have invested in the majority of the IPOs. but we have invested in quite a few, and I'm glad to report that all my funds or all the IPOs that we have invested in, we have made money. So it is, I guess it's a matter of the private sector IPOs are coming with attractive valuations. They are leaving something for the investor, more importantly for the retail investor on the table. And we feel that going forward, whichever IPO is going to hit the marketplace, unless the valuations are upwardly crazy, it's going to be a good time for retail investors to invest and make some money out of it.
All right. So, dependent on valuations and whether the company leaves something on the table, definitely there could be some more gains for some of those IPOs. Talk about the IT sector, Waqar. The Infosys numbers are just around the corner, but there's been some bit of pressure building up on the IT space, partly on account of a stronger rupee, but there are some other market voices that do suggest that the salary increments and the recent wage hikes that have been given by the IT companies could put some bit of pressure on the margins there. But what's your general sense on the IT sector? Do you think that sector could well again be the relative outperformer, both in terms of earnings and also in terms of gains?
We are neutral, Ashu, on the IT sector. While we feel that businesses to which the IT sector caters are looking up, and of course, let me also add that we are bullish on IT sector, which is catering to, the infrastructural needs, or maybe to the power sector or to the capital goods sector. It's difficult for us to distinguish at this point in time for each stock. So we are at this point in time neutral. The salary increments I would like to discount because I guess in the previous year IT companies had not really come up with increments and were a disappointment to most of their employees. Perhaps rightfully so. I do not know their inside story in terms of how well they were doing and how their figures were looking. But yes, the increments were poor last year, so this year they are just making it up. And we are neutral on the IT sector. We are not very bullish. We are not negative. We would like to watch out how it unfolds for a couple of more months, I would say.
All right, Waqar, just one final question on the real estate space. Again, this is one sector which has been under tremendous pressure over the last 1 year, rather 2 years now. And suddenly with the rate cycle turning upwards, it seems like there was the expectation of recovery perhaps were far-fetched for this particular space. Then we have the issue of service tax, which has been widened as far as the real estate space. What is your sense? Have you perhaps been investing in this sector, or perhaps it's best avoided right now? And if you have been, would you prefer to stick to the large caps or the mid caps there?
No, I'm afraid, Ashu, we are not bullish on the real estate sector. We have been out of it. We have not invested, and yes, while we believe that service tax imposed by the government in the latest budget is not going to make a tremendous difference, we definitely believe that the commercial space supply is going to be much more than the demand. We are not bullish on real estate as of now, and we continue to be negative.
All right, Waqar, thanks for joining us with that comprehensive analysis of the market fundamentals and of course the sectors to watch out for as well from an investment standpoint. Waqar Naqvi there, head of Taurus Mutual Fund. All right, that pretty much wraps up this edition of D Street. Stay tuned because lots more is coming up next.